All right, so today, well, I'd like to start off with saying I haven't uploaded in a long time, and the reason I feel the need to upload today is for myself and additionally for you guys. So I lost money today. I didn't take a good trade. I almost did, but I didn't. So the reason why I think I should show you, or why I think it's important, is because it could have easily been avoided, and it almost was avoided, but it wasn't because of some silly mistakes that I made. So let me go back and show you guys whoa, that's new. Let me go back and show you guys what market looked like before open. So on the daily time frame, we had this is also my trading strategy too. So this will kind of give you guys an idea of what I look for when I trade, why I take the trades I do. And I almost made money today, but I didn't. So let's see. So on the daily time frame, we are bullish. Why do I say that? Because we have this push up, this push down, another push up. It looks like a bullish. Um, yeah, it just looks bullish. What is it called? A bullish trend, I guess. Yeah, but that's not really how I trade. But then a lower high, and we are in the process of making this higher high, right? So this is kind of, if I just move this over, this is, we're down, up, higher, lower, and even higher. So that's how I'm looking at the charts. And on this daily time frame, we have, let me just hide everything for a second. Right there. That is a fair value gap. And I'll show you guys, I'll highlight it. This candle's low right here. If you draw it out here, I'll make this line super thick so you can see it. And then this high, boom, right? And we tapped into it on this day. We went down into it, then we went higher. Now, if you look at this, this is a bearish fair value gap that probably needs to be filled. God bless you. Now, we have this bearish order block, well, actually, breaker block. This bearish order block, this bearish order block, all of these bearish things, and this high. This is the bottom of, this is the top of the fair value gap. So there's a lot of resting liquidity up here that we swept yesterday. So I was expecting bearish prices. What can you expect to go for? We've got this lower here, previous day low, this low. You've got this low. We will probably continue to purge these lows, and this might be a sign of a reversal. We're going to sweep out these lows, go lower, probably under this low, and then you might see a change in state to the top. Okay, so that is what I'm expecting, but I saw that we tapped this. I go into the 15-minute time frame and mark out all the liquidity. So this, I love this. The ICT kill zones, I love it. This has Asia session right here. This was all over it last night. You draw the low out into today. You draw London's low out into today. You draw New York AM low out to today. So that is Asia's, London's, and New York sessions yesterday's liquidity. These are all the lows. And then this is Tuesday and Wednesday's low. They're relative equal lows. So this is a high point in liquidity because they're basically touching the same level. So let's take a look at what happened today. We create equal highs last night, and that was my original idea, was that we were going to be bullish. We would sweep a low, and I was expecting a push into these highs, but we might save those for after we go bearish in the next couple of days. I'm assuming next week will be bearish because of today's closure, but so what happened was at 7, this is all we're looking at. We're looking at 7 in the morning. So this right here, this is the furthest point we're going to be looking at. Right here. So 7 in the morning, we go up, we go down. We go up. What do we leave behind here? We leave a lot of orders. There's a lot of people trading these trend lines, and this trend line looks like that. So a lot of people are thinking, okay, and what else do you see? There's a lot of trend lines, quote unquote trend lines here. So people are probably looking like, oh, it's gonna break out, right? In reality, we know that's not what's gonna happen. We know that there's relative equal highs here, 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 here. These are all relative equal highs. This is all buy side liquidity. And the high that formed all of this is right here. It was during London session. So this high would need to be swept in order to sweep out all of this liquidity and push us lower. Or vice versa, this low would need to be swept to take out all this liquidity. And then you could see a push higher. And because my strategy usually involves both sides being taken, I was expecting us to push higher, which we did at 8:30 in the morning. There was news too. I was expecting a push lower and then a final push higher. And I wanted to catch the reversal part. So let's go down to this. So we swept the liquidity and we left these relative equal highs. At 9:25, right before opening, we swept it there with this candle. We swept it. So what can you expect? You can expect prices to go down, and boy, did they go down. 9:30 opens and we just rip to the downside. I was looking for buys. I was looking for buys. Okay, so this is yesterday's low. No, this is yesterday's low, New York. This is yesterday's London and yesterday's Asia low. So you can see here that they act like key levels. Every time they got tapped, boom, we pushed through. We hit yesterday's London low. We tap back into yesterday's New York high, or New York's low. We push, we get some resistance, and then we push further. This is what I would like to mention. So we have, on a high time frame, this is important, on a high time frame, we have these equal lows. Remember I told you about that? Why is that so important to me? Because when we finally sweep all of this liquidity from yesterday, New York, yesterday, London, yesterday, Asia, we don't sweep the sell side liquidity just yet. And that's like the last target that we have. So instead, let me just clean up the chart a little bit, get rid of these. So we still have this. At this point in time, while I was trading, it was not taken yet. So this is like the final area that you can go see price go down before either continuing or making a correction. It looks like it's getting corrected now, going probably back up. So I took a trade here because my model is we tap into London low. We get a change in state of delivery by sweeping this high. We got to close above. We get a fair value gap. We get a breaker block. We get a lot of confluences. So I entered here with my stop loss tight because we were in a downtrend. It was super tight. It was like right there. And my longs were up here for Asia Open, for the London Open, for the session open. That was my trade. It got stopped out. Obviously, it got stopped out. So I was sitting back patiently waiting. And I see that we don't tap this. So I'm thinking there might be a reversal, but this could be fake. So what do I look for? For confirmation, we get this high. Now look here. That is a fair value gap. Yes, good job. So we're going to draw a line from the bottom of that fair value gap out. What does that look like to you? Relative equal highs, right? You get 1, 2, 3, 4. You get a bunch of miniature highs here. As soon as price broke out, I caught FOMO. I got emotional. I caught FOMO. And I have it on video. So I would like to share that with you. Huh. It's a random video. Oh, that's the video I'm recording now. Let's not delete that. Okay, so in here, I was doing my little Bible study and whatnot. So I had my sell orders already placed. I already thought we were gonna go bearish, right? You see that? Limit sell. I was expecting price to go into this fair value gap here and push lower with my stop loss here and my take profit here. And I almost caught this move. Let's just make myself feel bad. 74 points times 3 micro NASDAQ contracts. How much profit in 74 points across 3 micro NASDAQ contracts? I would have made $444 today, $444. But I didn't. So the reason why I didn't take this trade was because I wasn't thinking correctly. Obviously, this was a fair value gap, like super obviously. And below it, if we just hide this for a second, there's all of this buy side liquidity. People are thinking, oh, great. That's right here, change in state. Oh my gosh, right there. That's a fair value gap, guys. We're going up. We're reversing here. And then even here, people see this order block. They think, oh my gosh, we're going up from here. We're going up. Oh my gosh, the trade is up. But they're forgetting that we're in a bearish market, and I forgot that too. So this right here, this little section, that was a run on buy side liquidity. And what happened right after we got that, we quite literally dumped to my take profit within 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So in like 15 minutes, you would have made $450 had you had 3 contracts. 450 divided by 13 minutes, divided by 15 minutes. You're getting paid $30 a minute. That's the equivalent of getting paid $1,800 an hour. So but yeah, I didn't take that. So the reason why I didn't take that was I could probably find it in the video. Maybe not. I can't find my entry, but basically, I don't even know why. But yes, pay attention to these. Pay attention to these. If you have a buy side order and then you see that price is doing this, it's forming relative equal lows, it's generating liquidity, and it barely missed out on this liquidity, it's not for any reason. It's because so many people are buying down here. Everyone wants to buy, and you can't push it down if everyone is buying. So they have to force you to buy it to sell it to them. So yes, they generated buy-side liquidity. I'm sure all the firms and the banks were generating buy-side liquidity. They swept it with these equal highs. They ran manipulation on the market right there. They caught me. They caught probably a good amount of people because they pushed it down. And what happened right after it got to this point? You cannot tell me that the markets are not rigged, that this isn't fake, that it's not an algorithm, that it's not people doing this on purpose. Boom. They sold their profits there. They pushed it back up. And now we're in this range. You don't ever want to trade that type of range. Ever. Yeah. Supply and demand traders could probably tell you, oh, well, there's an order block right here. You can trade this into here, into this support. Yes, you can catch a trade. Set it here. Set your stop loss above it. For a 1.35 risk to reward, where you're risking 40 points. That's $240. No, thank you. So yeah, don't trade that stuff. Don't just be patient. I almost took the trade too, but I didn't. As you can see, I had my order ready. Oh, this is actually where I went long. I found it. I had my buy there. I saw that little fair value gap, but for some reason I thought trading in the... Sometimes you have to take a deep breath, look at the chart, and be like, we're in a range. Are we really going to break out of this and go bullish? Probably not. We have relative equal highs in this fair value gap. I'll probably
exactly what I wanted.
And I did. I got stopped that really fast. Really fast. I was up. The most I was up in that trade was probably like $5. Yeah, I was up like $5.
Well, lad, you want to break out anytime soon?
I was up like $20 at one point. That's about it. So yeah. Oh, 31. 37, my fault. Yeah. That was an easy sell. Look, I literally, in my other video that I recorded,
all right,
I had my sells there. I was looking to sell it there because I saw all that liquidity and I wanted to run up, a fake run up. But when price turned around, I just lost courage. So I got rid of the order. I should have definitely kept the order there. So yeah, peace out, boys. Stay calm. Stay confident. Stay confident in your trade, man. Stay confidently calm. Confident. Don't catch FOMO. Stick to your rules. Watch out for liquidity forming while you're about to take a setup. Because liquidity forms. It's not just overnight. Liquidity could form while you're taking your setup. So just make sure that you're not getting caught on the wrong side of the market. And most of all, praise the one and only God who gave you another day on this earth. Praise God. God bless. And I'll catch y'all next week. I'm not trading over the weekend because nobody does. So I'll catch y'all maybe on Tuesday. I don't know if I want to trade No News Monday because last No News Monday, I'm going to see if I can actually pull it up. Friday, Thursday, Wednesday, Tuesday, Monday. This is Monday, right? This is Monday. I think I lost money. There's no way. Did I actually
stop? Ricky, stop. Stop. Hey.
My dog was blowing by. I think I got stopped out, which didn't help my mood. What happens? I'm so curious. Yeah, I'm probably not gonna trade a No News Monday next week. I got stopped out, right?
Order filled.
Okay, so on Monday I lost $100. So yeah, maybe we don't trade No News Monday. Maybe we do not trade No News Monday. Maybe I'll just wait till Tuesday to trade. All right, God bless everybody. Thank you. Have a great day. God loves you.